Hello everyone, thanks for continuing to watch my videos. Over here on 16 June, students are billed $18,500 for the June transaction fee. So what is the keyword of here? When you do the journals, you have to always look for the keyword. So over here, keyword is a billed, right? So billed is a keyword. If you see something like a billed invoiced, you have to assume it's on credit and it's a revenue. And if you make money on credits, account receivable will always debit and revenue is always credit. So over here, your asset get increased, but your revenue also increase. So if asset increase debit, if revenue increase credit. But in this one, you see the paid salaries. It's like a paid expenses. So it's very normal, expense debit, bank credit. So you have over here salary debit, bank credit. But over here, this one is a little bit tricky. On 25th June, the school collected $14,000 on account from the student bill in transaction 6. So go to transaction 6. What happens? Transaction 6, we can see they make money. I mean, firm sells something to the customer on credit. But in transaction 8 on 25th June, they collected some money from their customers. So I told you before, if you receive money, that's a bank debit. So it's like an asset, so your asset get increased, so your asset get increased, so that's why it's a debit. But your account receivable, that's also your asset, but at that time your asset get decreased, so that's why it's a credit. Now 26th June. 26th June is completely opposite of 25th of June. In this transaction, school pay $1,200 on account for the fuel, so go to the transaction 5. So what happens in transaction 5? On transaction 5, you can see they purchase something on credit. But what happens in transaction, I think transaction 9, yeah. So they purchased something on credit before, so now they're paying the money. So I told you, if you pay money, so that time always bank credit. But if you're paying to accounts payable, right? So your liability getting decreased. So your liability getting decreased. So when your liability getting decreased, that time liability become debit. Now the last one on 29 June. On 20 no, not last one. On 29 June, he'll withdraw $100 from the firm for personal use. So what is drawings? Drawings is like a minus equity. You take money from the firm for your personal use, right? So it's like a minus equity. So if it sounds like a equity getting decreased. So when your equity getting decreased, equity is a credit, right? So if it decrease, that's a debit. So it's, you can say, so equity getting decrease. So if you decrease, that's why it's a debit. So I told you, if you take money from the firm, or you know your firm pay money, so at that time always bank is a credit. So now this is I think the last one, and this I think the most complicated one. You see, the 1 month of the prepaid insurance of $100 had expired. Okay, so what is the keyword over here? So keyword over here is a prepaid insurance. So what is prepaid insurance? Remember, prepaid insurance is not expenses. Prepaid insurance is an asset. Insurance expense is an expenses, but if you pay in advance, if you pay any expense in advance, that become prepayment or prepaid, and all prepaids are asset. But over here, your asset get decreased. So asset get decreased, that's why it's a credit, and expense is a debit. So you pay money, so it's like you're paying to bill, or you're paying expenses, so that's why expense getting increased. So the expense getting increased debit, but your asset get decreased, that's why credit. Thanks for watching my video.